Welcome back. Well, the markets are holding at around 19,400 odd, but that's only courtesy Reliance Industries. Actually, stripped of that, the markets would have been in the red. Reliance Industries is up close to around 3.5% or thereabouts, and that's the reason why the Nifty is in the green. If not for that, we could probably be in the red. Just one more stock. Idea Forge, it saw a blockbuster listing. It doubled your money on listing itself. Well, today it's pulling back a little bit. Idea Forge is down close to around 6%. As we speak, mainly valuations got a little bit stretched out, maybe too much euphoria into the stock, so it's pulling back a little bit this morning. Well, Deven Choksey of KRChoksey as well as Gurmeet Chadha, managing partner and CIO at Complete Circle, joins us to discuss about the entity that will be demerged from Reliance Industries. It's a financial services company, and also what kind of impact it could have on other NBFCs. Good morning, gentlemen. Thanks so much for joining in. Well, Deven, you go first. Tell us, what kind of a value are you ascribing to it? It's going to have a lot of capital, so it will have the ammunition to grow from here on as well. What valuations would you give it?
Hey, good morning, Nigel. Well, I think on the first place, I think this particular company, Jio Financial Services, assumes, I think, the capital of around somewhere around 1,50,000 crores, out of which I think about 1,10,000 crore would be the shares of Reliance Industry which they hold, and balance would be in form of their cash net worth that they have been having in the books. So typically, when you look at it in this kind of proposition, I think when you compare with the other largest peers in the industry, they are probably, I think, if not more, 2.5 times, 3 times more, I think, or more than 3 times rather, in my viewpoint. I think from Bajaj Finance. Bajaj Finance could have about 45,000 crore worth of net worth, as against which I think here you are having net worth, actual net worth in excess of around 1,50,000 crores. But even if I had to take the haircut of the shares, it is around 3 times. So from that perspective, I think you're likely to see the sharp jump into the business going forward because of the net worth that they have. On the other side, the business proposition is that you have the merchant lending business on one side and the retail lending on the other side. As far as retail lending business goes, I think the electronics segment of the business could be, I think, the prime driver of the higher amount of credit offtake is concerned on subvention pricing, which this company could take an advantage of in form of getting higher amount of NIM. On the other side, the merchant lending, because of the presence with the Kirana stores, they would probably have this ready to consume credits as far as the market is concerned for them, which could also drive the business for them for the retail business. So in my viewpoint, I think as far as Jio Financial Services is concerned, this is going to be, I think, accretive for the shareholders of Reliance Industries from the day one, because in a 1:1 ratio, the shares are being allotted. And that is where probably I think you are likely to see higher amount of growth into the stock price. I haven't calculated, I think, per share impact immediately as far as I think what exactly would be the impact. But we believe that I think 3 years from now, the business of Jio Financial Services could have assumed the book size of around 10 lakh crores. So that is where we believe that I think the higher valuation would ultimately be available to shareholders of Reliance from Jio Financial Services eventually.
Okay, so 10 lakh crores is what the book of Jio Financial Services could be. You're saying 3 years from now, the total business and how much it's valued, right? In fact, I wanted to get Gurmeet into this discussion as well. Gurmeet, when we were chatting earlier, you said to me that, Jio Financial Services, once it comes through, once the listing happens, is going to disrupt a lot of spaces in a big way, whether it's lending, wealth management, insurance, payments bank, etc. How much of all of that you think is already in the price of Reliance Industries?
Not much, Sonia. I think it just moved up 3-4% today, and it's been in a range, that 2,200 to 2,700 range now for almost a couple of years. So I think I agree with Deven sir that if you see at 6.1% stake at today's market cap is about 1.1 lakh crores roughly, and you add the other, if you add the combined net worth and divide it by the number of shares, the book value would be close to 200 odd. Huge excess. So, you have Jio at 44 crore subscribers. They clearly have a sense of how much is postpaid, prepaid, what is the pattern. Then you have, Reliance Retail at 18,000 stores, and they're leader in a lot of categories, including groceries, lifestyle, electronics, as Deven said. Also, RIL or entire vendor system, they exactly know, it's a huge vendor ecosystem RIL has across various businesses. And the best part would be that they will get a AAA rating, courtesy the AAA rating of RIL. So the cost of borrowing would be in lines with some amongst the best. In fact, would be lower even than Bajaj Finance, etc. So if you have a cost of borrowing lower and you have a huge network client base, good data analytics other than your traditional credit-based, bureau underwriting, I think this could be, and they've made a mention of that they want to list the consumer businesses eventually. So I think a lot of future value unlocking is in store. What you're just seeing right now is probably a beginning.
Yes, Reliance can leverage the entire network effect of Reliance Jio as well as Reliance Retail, and one should also watch out for attrition at the other NBFC or payment companies, because as Reliance Jio looks to build this company into a behemoth, it will be looking for talent, and the talent could come in from the existing players. Deven, I know it's very early days and a lot depends on Jio Financial's execution, but would you be cautious on any of the lending franchisees in the NBFC space, the likes of, say, a Chola or a Bajaj Finance? Is it time to, just, take a step back from investing in these companies to see how this entire battle plays out and competition heats up?
Well, actually speaking, I'm not too much concerned about how exactly it is going to play out for the competitors for a season. Because on one side, the credit growth is systematically growing for all the players. It's not that I think for only few players it is growing. On the other side, every other player has a book size, which is, I think, limited to whatever they can lend. So from a perspective of looking at higher amount of ability to lend, and if Reliance Jio Financial Services entering into this particular market, somewhere they are also going to convert the unorganized market, I think, into an organized market through a systematic use of the platform-based disbursals of the credits. And that's where probably I believe that they will have a larger opportunity at the same time. Say, for example, today Kirana stores as known, I think they also resort to a significant amount of unorganized sector of lending. Now, if these Kirana stores are linked to the entire Geo platform solution, then the credits goes naturally to these Kirana stores, and that market is absolutely untapped at this point of time by most of the players, which could possibly, I think, become a real market for them. Similarly, on the other side, I think likes of Bajaj Finance has successfully created a model wherein I think they produce zero EMI based customers in different verticals. Now, given the size of Bajaj Finance, I guess I think if you have larger amount of balance sheet available elsewhere, then probably I think the customer is on the other side who is consuming more, and that could create another set of market. And that is where again I believe that Jio Financial Services could play a role. Yes, I think the threat remains to those players who are unable to process loans in time at the instance itself. If they cannot process it by use of the technology, certainly I think they would be relatively at disadvantage. But I think that fraction of people are relatively small, and the size of their balance sheet is also small. Like for Bajaj Finance, I believe that I think they are very well and adequately placed, even with the technology that they are having at the front end. I would not be unduly perturbed about the entry of Jio Financial at this point of time. And as I said, 3 years are required for any financial company to build the model minimum. And that's where I guess I think the Reliance Jio Financial will have to, I think, demonstrate in next 3 years how exactly they'll successfully make inroads into different markets.
Okay, all right, Deven, taking note of that point. Gurmeet, what about you? Bajaj Finance, you have been fairly positive on the stock and it's worked very, very well. On a price to book basis, well, it's at, I think, it's one of the most expensive stocks, but maybe for good reason. Given that the stock is under pressure, would you look to get into it? Or do you believe now with the entry of a big formidable player, there's a risk to that price to book multiple itself?
Nigel, I agree, not immediately, but there will be eventually a risk because Jio, if you see disrupted mobility, so some margin pressure could come in as they disrupt, and Reliance is known for scale. So it will not happen immediately, as even Deven said, it will take time, and NBFCs take time to really build scale. But at Reliance level, the scale will be built much higher. And I think a lot of these new age businesses, you need to now value on basis they're earning multiple more along with the price book, because they're basically a play on consumer spending in India picking up, more largely discretionary. Second, credit creation. The 40, 50 crore customers now coming in the formal credit did not have access. So there is space for everyone. There's a space for Credit Access Grameen, Equitas also. There's a space for, the digital lenders, including Bajaj Finance or even Paytm right now. And there is space for, large. We probably need more Bajaj Finance and Jio Financials and SDFC as we embark on that journey, right? Because the overall market is large. But I think the big story to me is the value unlocking in RIL. I think if you value even retail, if you take both the developments together, RIL now is valued at almost $100 billion with just 13% contribution to EBIT. Jio Financial Services will get demerged. Eventually, Jio also will get. So technically, at current valuation, oil to chemical business is virtually free if you just evaluate, just the valuation. So I think now it's a beginning of, as they've made points that consumer business is getting listed separately over next 12 to 24 months, and a lot of value unlocking happening.
Okay, I guess the comparison with Bajaj Finance and GFS is valid, right? I mean, if you look at just the numbers, Bajaj Finance's consolidated net worth stands at what, $7 billion right now. And GFS, after it's infused with 6% of Reliance Industries treasury shares, implies a net worth of $13 billion. So straight off the back, it starts off as being the largest NBFC in India in terms of net worth. So I guess that's why Nigel's question to you on Bajaj Finance and the comparison then, whether it's a big threat. But thanks, gentlemen, for joining in. Appreciate your thoughts. We'll, of course, continue this discussion, this evaluation on all the latest takeaways from Reliance Industries through the course of the day. So stay tuned.